Happy Wednesday to you. So glad you joined us and allowed us to be a part of your day here on midweek as we get ready for a long holiday weekend. Don't forget, there will be no market activity on Monday because of Memorial Day. So everything will be quiet then. Could be some funny things happening in the markets here ahead of the long weekend and before the end of the month as well. So it could be an interesting setup for the next couple of days here. We have Todd Bubba Horwitz with us right now. He's with BubbaTrading.com, and he's actually in Las Vegas right now as we talk with him. And Todd, let's take a look at some of these prices that we currently have at our quotes provided by Bar Chart, and we'll walk through these here. I want to get your take on this. Corn higher today. Look at this go. July corn now up 8 at 585.5. In December, 7.5 higher at 524.25. So that's interesting. And then you have the soybeans 11.5 higher on July at 1334. And you have November 5.5 higher at 1193.25. So corn higher, soybeans higher. Wheat market in Chicago, July, we're lower. We're 5.25 lower at 617 per bushel so far today. In Kansas City, July down 13.5 at 828. And in the Minneapolis spring wheat trade so far today, you have that July contract 7.5 cents lower. We're now at 813.25. In the cotton market, you have July down 181 points at 82.54, and December down 152 at 80.92 per pound. So we have like the corn and soybeans against the wheat and the cotton market here so far today. Todd, what is the deal? It seems like they're pairing up in different ways each day this week. Yesterday it was the corn and wheat versus soybeans. Now today it's the corn and beans versus the wheat and cotton. What's driving the corn market higher in your opinion today?
Well, Marlon, I think we're in a very interesting position right now. We're, first of all, in the economy, we're very close to a deflationary scenario, which would not be good. But right now, what we've seen potentially some lows put in all of the grains, and corn and beans are now moving up towards the upper end of that range. The best thing that could happen right now, in my opinion, for these markets is that they can consolidate for a while and improve these as a bottom, and possibly get a rally off of them. Wheat's got a must hold at $6. Corn's got a must hold at $5.50, and soybeans have a must hold around $12.80. And if we can hold those prices, then we should be in pretty good shape and at least see some upward momentum. Cotton is still trying to break out. Cotton's been in this range for, 6 months already now, of going basically sideways. So I think that we're in a very scary position, but we can certainly come out of it. And if we can get some demand and get some action in here, then I think we could see some higher prices. But if we're going to keep buying wheat from Poland, not a very good scenario.
All right, so on corn planting, we're way over 80% done now. So basically, the trade is now going to be focusing on the growing season weather and also the crop condition moving forward. From everybody I've had a chance to talk to, it sounds like most of the corn crop is off to a pretty good start, and they expect a really high condition rating to get started.
It looks pretty good. And again, the real thing's going to come down to the economy, Merlin, and dollars and cents. And of course, the price of crude oil and other things that, tie into our general economy. And, crude oil is flying, which is not good. And of course, we have the Federal Reserve continuing to hike rates. You may not think of the effect they have on our crops, but they do. They have a dramatic effect because of dollars and cents and money. So at the end of the day, we got to hold these levels here. We've got to see some changes, and if we can get a little bit of a buying momentum, I think we can start to see some upward movement. But again, we are in very crucial areas pretty much across the board right now.
Right now, West Texas Intermediate crude on July is now up $1.50. We're at $74.41 per barrel, as July is now the lead month there. All right, we'll come back in a moment, and Todd, we'll talk about livestock here on a Wednesday morning. Our guest, Todd Bubba Horwitz, and we'll be right back. All right, we're back with you, and now let's shift our focus here, and let's go to livestock trade. We'll go to live cattle first. Here's a look at our quotes provided by Bar Chart, and whoa, what the heck happened here? We have everything higher. June live cattle now 65 cents higher at 164.92. Well, we had a low of 163.65 this morning. That means they have reversed out. We are now as high as we were lower a little bit ago. August live cattle up 57 at 163.15. Well, what a deal that is. Now, looking at the feeder cattle market, you have the August contract now just 50 cents lower. We're at 232.97. So that's a bounce of about $1.45 or so off of our earlier low this morning. Things really starting to come back here in the cattle trade. September down 47 cents at 236.27. Lean hogs, I'm almost afraid to look at them. Will I scare it away? No, they're still higher. June is 42 higher at 81.10, and July is up 85 cents at 81.82. My goodness, they've been higher for over an hour now. So we'll see if they can hang on to that through the rest of the day. We have Todd Bubba Horwitz back with us here. How about that? The lean hogs can bounce, Todd.
Well, actually, I thought they could bounce off of 80, and they look pretty bad, Marlon, and it's really strange. This time of year, we've got some very weird markets going on. And the cattle prices have remained steady to higher for quite a while. And, of course, the biggest part of that is that there's a shortage of cattle. So, those who can afford it are buying it, and they're really buying up the supply. So those prices should remain. I don't think they're going to run crazily higher, but I think they're going to hold these prices where they're at, if not work a little bit higher. Hogs are at a pretty crucial spot here. It's very unusual to see hogs at about 80 cents and, in this time of year going right into the barbecue season. But I would suspect that maybe they'll find a bottom here at some point. And again, this will also be based on the economy, because if they can't afford hogs, they'll go down to the next protein, which will be poultry.
All right, Todd. Well, thank you for joining us here today, and best wishes for a great holiday weekend this weekend. Todd Bubba Horwitz with us. He's with BubbaTrading.com, and he's working out of Chicago today. Suzanne,